Join the club of the richest 1%. By employing the strategies in this video, you can become rich and established and join the club of the richest 1%.
The knowledge and strategies in this video are rooted in Jacob Neyman's extensive experience, distilling more than a quarter of a century in his role as a leading investment and economic advisor to some of the world's wealthiest. Infusing your life with the financial strategies outlined in this video will enable you to achieve the most important goal of the 21st century: financial independence.
In the process of wealth building, one of the most important actions is to maintain the portfolio asset allocation. Why is it important to maintain the rule of thirds? Because it enables you to implement the golden rule: don't put all your eggs in one basket. The rule of thirds: invest 1/3 in stocks and bonds. Invest 1/3 in real estate and commodities. Invest 1/3 in money and its equivalents. Balancing your portfolio means buying and selling securities in a way that will return the portfolio to its desired risk levels. For example, due to an increase in share prices in the stock market, the market and alpha components in the portfolio can grow considerably. Let's assume that after 3 months they each grow from 33% to 40%. So now we have a portfolio with only 20% liquidity, not the 33% you intended to have when you were first building your investment portfolio. What should you do in this scenario to rebalance your portfolio? In the process of rebalancing, we will sell 7% of the alpha component and 7% of the market component, and the money from the sales will be reinvested in relevant products in the liquid component. The result of this rebalancing process will be a balanced portfolio that maintains the rule of thirds. The maintenance process. Check your investment portfolio every 3 months to see if it meets the rule of thirds. If necessary, rebalance to maintain the desired asset allocation. When the ETFs go down, buy more shares to rebalance. When the ETFs go up, sell some of the stocks and materialize profits to rebalance. The main points. Rebalancing involves periodically buying or selling assets in a portfolio to maintain its original or desired level of asset allocation. In the process of rebalancing every 3 months, maintain the rule of thirds.
Is predicting your economic future a riddle wrapped in an enigma? Not quite. It's about creating it. Financial practices shared in the earlier segment, courtesy of financial expert Jacob Neyman, are your toolkit for securing that future. But here's the catch. Knowledge isn't the ultimate prize. It's action that truly counts. The upcoming segment aims to spark that drive, that motivation within you to implement these strategies. So take note and remember, in the grand chessboard of finance, it's not the player who knows the most moves, but the one who actually makes them, who wins. This video contains valuable information. Use it.
Do you know how to rebalance your investment portfolio? Let's unravel this together. Portfolio rebalancing is about maintaining harmony between various investments. It's like tuning an orchestra, each instrument playing its part. Rebalancing is a key to managing risk and keeping your investment strategy on track. The first step in rebalancing your portfolio is understanding what you currently have. It's essential to grasp the current distribution of assets and evaluate the performance of each class. This knowledge provides a clear picture of your investment landscape. Knowing where you stand is crucial before making any changes. Next, you need to decide your ideal asset allocation. This is the mix of investments you hold, like stocks, bonds, or real estate. Your unique blend should reflect your risk tolerance and financial goals. Your ideal asset allocation reflects your financial goals and risk tolerance. Once you know your ideal asset allocation, it's time to implement changes. This involves the strategic buying and selling of assets to achieve your desired balance. Remember, it's not about timing the market, but time in the market. Implementing changes can help align your portfolio with your investment goals. Rebalancing isn't a one-time event. It requires regular reviews and adjustments. Market conditions constantly shift, potentially skewing your portfolio's balance. Regular check-ins help align your investments with your goals. By regularly reviewing and adjusting, you can ensure your portfolio stays aligned with your goals. So, we've walked through the steps of rebalancing your investment portfolio. We've underscored the importance of understanding your current portfolio, as it's your starting point. We've emphasized that determining your ideal asset allocation is crucial, as it's your roadmap to financial success. We've demonstrated how to implement changes and adjust your investments to align with your ideal allocation. And we've stressed the need for regular reviews and adjustments. These reviews keep your portfolio in tune with your goals and allow you to adapt to changes in the market. Rebalancing isn't a one-off task, it's a continuous process. Remember, rebalancing is an essential tool to manage risk and stay on track with your investment goals.